The supplier awards are always at the end, right? And we thought we're never going to win this, we're a small company. And our name got called and we were like, oh my goodness. Walked past the other suppliers that have got 2 tables and they're paid for.
Nice.
3.
Can I just say, he'd make a brilliant podcast host. Like, for someone who was very reluctant to get in front of camera, you're very, very good at this.
Thank you.
That's how I get rid of him. This is great. Thanks.
Welcome back to another episode of RecTalk. I'm your host, Nitin Sharma, founder of RecTools.io, the host of the RecTalk podcast and co-founder of RecCircle and a whole bunch of other cool shit that I get to be involved in. This is a slightly unusual setup today. I'm actually sat behind the camera in producer mode. I wanted to introduce this podcast and this episode with my guests. I've got Adil and I've got Poonam from Azuki Accounts. They're going to take lead and basically tell us what we need to know and what things that we don't know about that we really should do. So first of all, guys, thank you so much for joining me in the studio.
Thank you for having us.
One day I will get a big enough studio to fit all 3 of us in a more comfy manner. But honestly, I appreciate this. I'm going to sort of throw it over to you guys to do a bit of intro about kind of background and that kind of thing. And then you guys have got some... Well, you're the most prepared guest that I've ever had. So you've got notes, you've got a plan. So I'm going to throw it over to you guys and let you guys take control from here.
Spot the accountant, right?
Yeah. Over to you.
Thank you so much. I'm Poonam Mawani, director of Azuki Accounts. Azuki's been going just over 9 years. We set up when I was a CFO of Milestone Operations, and we're on our earn out after selling them to Staffline PLC. And I thought, what do I go and do next? And the thought of kind of going back into big recruitment didn't really excite me. And what I loved about recruitment was working with owner managers, people that were really passionate and driven about what they did. And so the idea of Azuki was born, where we, in effect, look after recruitment businesses and we do everything for them outsourced. So everything from pay and bill, credit control, management accounts, as well as all the statutory stuff, year-end accounts, etc. The idea is that we're a one-stop shop for everything recruitment, finance-wise.
Lovely. And Adil, how did you end up in this mess?
That's a very good question. So, trained as an accountant, working in audit. Did a short stint in corporate finance before the financial crisis. Didn't last very long because of that very trend. I think I'd have been better off in business recovery at that point. It was a tough time. Then actually I worked in quite large companies. So I worked for Schroders, the large asset manager, and also for Ladbrokes more recently. And then Ladbrokes was merging with Gala Coral. They were moving our offices from close to home in Rayners Lane to Stratford in East London, and I didn't really fancy the commute. And by this point, Poonam had started the business, and it was kind of doing well enough that it could support both of us. So that's when I joined the business, and 7+ years on, we're somehow still married. I don't. So, Poonam, do you want to tell us why we're called Azuki?
Azuki is a Japanese bean because we're bean counters. Because we're just slightly different, boring, not so boring accountants.
Yeah, well, accountants try to be funny, I think. But.
Yeah, I mean, we're not. But
has anyone ever clocked that, though? Has anyone been like, I get what you're doing there?
One person in 9 years.
Yeah.
Yeah. So we often tell them.
As a branding expert, I would say that, yeah, okay, cool.
We just like the name.
Yeah. So it's too late to rebrand now, so you're just going to have to go with it. Yeah.
Well, unless you're consulting on the rebrand.
Yeah, well, yeah.
Excellent. So, Poonam, do you want to talk me through what you're seeing as the latest trends in outsourcing?
Yeah, I mean, the latest downturn has been quite significant for most recruitment businesses. And what we've noticed is businesses are holding on the same size finance team as they did post-pandemic, when obviously we were all flying, numbers were great, everything was doing hunky-dory. So, you would have had 4 people in finance, for example, and actually your numbers are probably not even half a quarter of what they were. So instead of, thinking, oh my God, I've got all of these finance heads, what do I do with them with lower volumes? We're noticing a trend where businesses are making the entire finance department redundant and outsourcing. So actually for a fraction of the price, you're getting an FD, you're getting an FC, an accounts assistant, and you're getting experts. And that's kind of the latest trend at the moment to save money.
I think that's quite sort of that's quite the trend across the board, right? Because I know a lot of the agencies that I'm sort of supporting and whatnot, they're doing a lot of this kind of looking at offshore options as well as outsource. So, there's this explosion in employer record and sort of if headcount is still something that these guys are keen to do, they're looking at, okay, can we go to the Philippines? Can we go to South Africa? Can we expand into the US market? That kind of thing. Whilst also kind of, again, with marketing, marketing's finally been taken seriously in the industry. But rather than hiring somebody in-house for the same kind of price, they're getting an entire function.
Yeah. Same with HR, same with L&D, all of those different functions. And actually what you need to do is make sure that you're with partners that work with all of those other, I call them back office kind of providers, to kind of make sure that you're all aligned on what you do. So we work really well with lawyers, we work really well with HR advisors, L&D, and actually we're all joined up, and we make sure that we're offering the same level of service as each of those providers.
What are you finding is the main reason that people do join you guys? There's no shortage of accountants out there, right? And it can't be just the price thing, because
we're recruitment specialists. We're not the cheapest.
No, but this is it, isn't it? Yeah.
But we're recruitment specialists. Like, our clients are only recruiters. We don't really deal with anyone else. I joke that my hairdresser's not free the net, but everyone is a recruiter, so we're experts in that field.
Yeah, so I think there are, if a client comes to me and goes, I'm in this situation, like 95% of the time we've come across that situation, so we're able to give a quick answer rather opposed to going to, actually I need to research what the situation is and then take a longer period to come back. So we've got that. I think the other piece is actually, in terms of financial reporting, we do a really good board pack that is tailored to the recruitment sector.
Award-winning.
What was the award?
Recruiter Award, Supplier of the Year, but we won it based on our board pack.
What year?
Proud of that.
What year?
That was last year.
Last year?
Yeah. I was there.
Were you?
Yeah, I was a guest of honour for David Huntington. I was on his table.
Oh, yeah. No, but the supplier awards are always at the end, right? So the agency ones are first.
Yeah.
So we obviously, had a few drinks by this point, and we thought we're never going to win this. We're a small company compared to everyone else in our category. And our name got called, and we were like, oh my goodness, we've got to walk up to the stage, walk past the other suppliers that have got 2 tables they've paid for.
Nice.
Sorry. But yeah.
I think the board pack is really key, because it's a mix of like obviously the obvious financial stuff that you'd expect to have there, P&L, balance sheet, cash flow, all of that good stuff. But there's like the recruitment specific metrics that touch on the financial and non-financial, and I think that's the stuff that sets us apart from other providers. Yeah.
Makes sense. I think, talking from experience, having an accountant who didn't quite understand recruitment, and then it wasn't just the accountant. I'd say the support team, that was the issue for us. We had bookkeepers and people doing the VAT returns, and that just didn't quite get it and would question everything, and that doesn't make sense, and why have you got this, and why are your cost of sales so high, and you just sort of think, really would be helpful if you just understood what we do.
Yeah.
So that we can explain, so we don't have to spend all that time explaining. But we don't always get, as business owners, we don't always get timely board packs or management accounts for that matter either. No. So are you seeing an increase in interest from business owners to actually know their numbers more? Yeah,
we offer free quarterly meetings with all of our clients anyway, and that's for us a way to learn what's going on. It gives us context when we're understanding the numbers and reviewing them, but it actually is a way of adding value as well, and that's everything that we do is about adding value. And so business owners are obviously having to take an interest in their numbers now, particularly with difficult, challenging economic climates. They have to, and I will always say you should understand your numbers, and if you don't, come and talk to us. Let's explain it, let's go through it. We'll do it 100 times if we need to, but you need to know what the numbers mean in order to make strategic decisions for your business.
Why do you think there's been that increase then? Because there was a period of time where business owners were just sort of like, I just need to focus on the billing. I want someone else and something else to look after my back office.
I think before, business owners relied a lot on sales, on GP, and they're like, I know what these numbers mean, that's easy. But actually in a downturn, you've got to look at costs, you've got to look at the other metrics, and am I paying too much for my staff? Are they not billing enough? Am I paying too much in other overheads, etc.? And they need to understand what those numbers mean and the impact on, yes, you could make losses for 3 months, but then after that, you're probably going to have an impact on cash flow. And that tends to happen. You have losses for 3 months, impacts on cash flow. What does that mean for your balance sheet? What does that mean for reserves? What does that mean for you taking money out of the business as well? And they need to understand those things. And I think the downturns is when actually people have to, pull up their socks and understand a bit more.
I think that's fair. But what I will say is the best business owners that I've worked with, they really know their numbers. And that's not to say they're not good sales managers, or they have a wide spectrum of skills and qualities, but actually they know their numbers. And actually, if you put a P&L in front of them and there is something wrong, and this does happen occasionally, they will be able to spot the number that's out. And there's that's something quite impressive, but I think it just comes from knowing your business really, really well.
Yeah.
But yeah, I think people do have to take more of an interest in the financials. But I think we've been through some pretty difficult times. From COVID to the latest downturn, plus a bit of a boom and a COVID recovery in the middle. Actually, we've had some challenging times that people have to navigate, and it's not just as easy as sell more.
No.
Yeah, I wish.
Yeah, well, this is it. Historically, they've had the mindset of like, I can sell my way out of this, whereas now it's sort of like people ain't buying as much. There's not as much product available. Product being candidates in this case, So now figure it out in other ways. So
we talked about RecTalk as well, and I think that's coming into play. And there are a lot of really good tools out there, but utilising them to the best. And this is the time to do it, really. When your kind of chips are down a little bit, this is the time to think about how do we pivot? How do we move into different markets and try different things?
Totally.
I think this is quite a good point to maybe talk about a bit about the downturn and what do you think has been the thing that's made a difference to the businesses who've navigated it better?
My personal view is ones that have pivoted to more retained search, definitely, rather than just contingent fees. They're also targeting a slightly higher level of roles, so C-suite, exec board. The ones that were able to analyse costs, drop costs quickly, and also pivot to new markets. That could be geographies, that could be new sectors, but this is the time to do it. And actually we know that there are certain sectors that have been significantly impacted by the downturn, but instead of just going, we'll just wait a few months, it'll pick up, and actually it doesn't, and you're still sitting on all of these heads, etc. And it's actually we can do a complementary sector and still try something different, and those are the ones that have done better in my view.
Yeah, I would echo that, and I think going into it, having a runner book, again, if you're in that position where your runner book can cover your fixed costs, that's everything temp and perm, then you're in a really, really good position. Or if you've got recurring fees from something like RPO, I think you naturally go into this in a better position. Also, if you're actually exposed to different geographies, I think it's fair to say during this downturn, the UK economy has been poor and probably one of the worst. So actually, if you were a slightly bigger business, you had some US operations, you had some European operations and some UK, then as each one was coming up or down, you're not completely, taken out at the knees, which some businesses were. The other bit is actually making a decision and making a decision quickly, actually sitting on your hands for 3 months maybe, but I think longer than that. I don't think you can go, actually, I'm making losses, my numbers are down, I'm not. You have to do something, whether that's getting rid of heads, looking at your fixed costs like rental, your office rental, that kind of stuff. You have to make changes, otherwise you're really going to struggle.
I spoke to a business owner, and they worked for a very large recruitment business at the beginning of the downturn, and he said they were private equity backed. And while everyone was umming and ahhing about what to do, how long will this last for, do we drop heads quickly, do we not, private equity came into that business and said, right, overnight we need you to drop 90 grand of costs, literally a month. Drop him now. Like, that's it. You've got until next week to make that decision what it is. He didn't have a choice. He had to go through all the staff that needed to go, downsize offices, everything, all of that in the space of a week. And he said the actual good thing was they forced me to make action. They forced me to make action. We did all right because of it. while other businesses sat there for potentially 3 months were umming and ahhing about how long is this downturn going to last? Is it just because of the general election? Is it because of something else? And here's that, I didn't have a choice. They made me do it. So there are benefits of doing it. And obviously the negatives are, if it was a short-term thing and the economy snapped back quickly after the general election in May, then, actually it wouldn't have been that bad. But it's different. It's difficult to know, isn't it?
The thing is, though, sometimes when your hand's forced in that sense, though, it gives you a chance to almost re-strategize, right? Do I actually need that level of headcount? In fact, okay, things are starting to bounce back now. What a better time than ever before than to kind of start looking at the tech landscape. How do we use that? Looking at offshoring as a solution, looking at outsourcing. It kind of, during those times when you're forced to make decisions, that sort of almost, it can change your fortunes, right? And sort of redefine how you operate as a business. Just cast your mind back to 5 years ago, right? Everyone got sent home and the world went digital overnight, and then businesses were like, oh, fucking hell, this is really easy. We could do this, whereas others really struggled with it because they just weren't prepared to change their culturally sort of their approach to how they operated.
Well, headcount is also a bit of vanity, isn't it? Everyone goes, oh, how many heads have you got now? Yeah. And you're like, great, I've got 50 people, but only 2 of them are doing anything. What's the point?
We've got process law, right? Again, that whole equation works better in recruitment than in any other industry around kind of the number of headcounts that you've got, and the square root of that is how many people are actually carrying the weight.
Yeah.
But then the other side of it is I'm yet to meet a single sort of exited founder that ever sat there and went, I ran a business of X profitability and sold it for X amount. It's always, I ran a 50 million turnover business, 25 million turnover business.
Yeah.
I had 100 heads. And it's like, well, what is that? That's just so bizarre, right? It's just a bizarre thing to brag about because none of those metrics actually matter.
It is, and we have some different. I think we had a couple of clients actually, and it was really interesting to see. So we had one business that was probably 25, 30 heads, and a good business, very niche, international, and they were generating about 1 million EBITDA. Another business doing 1 million EBITDA off 5 heads. Which one do you want? I mean,
well, I guess it depends what your end goal is, right?
Absolutely.
Kind of leads us nicely onto exits. But everyone talks about wanting to do an exit. Actually, the majority of them don't, and will probably never do an exit. But actually, an exit doesn't just have to be a sale. It doesn't have to be a sale to a private equity or trade sale. Actually, an exit could be a lifestyle business, and that's absolutely fine if that's what you want. It could be an MBO. It could also be the latest fad of EOTs.
Yep.
Can you talk us through EOTs?
What's an EOT?
An employee ownership trust, and I think the latest trend has been to essentially sell your business to an employee ownership trust. Why, you say? I think the biggest benefit is actually from a kind of a tax point of view. There is virtually zero tax paid on the sale of that business to the employee ownership trust.
So no capital gains tax.
So give us some financial examples of that then. So say I have a 10 million turnover business
okay,
with 125 heads.
Yeah, making no money.
Making absolutely zero.
The math's easy for me, please. Let's go 1 million EBITDA.
Right.
And let's say we're selling on a 7 times multiple because we're feeling generous. It's nice and niche.
And you're valuing your own self, so it helps.
And so there is an element of this actually in terms of the valuation. So you do need to get an independent valuation, but I think there is some poetic license in terms of steering that valuation to the slightly higher side.
Mm-hmm.
So great, you're getting to maybe 7-8 million valuation, and essentially you then normally you would pay 10% on the first million, and then you'd be paying like 20% on the rest of it in terms of tax. So all of that is gone at the point you sell to the EOT.
Mm-hmm.
But what does happen is that you can only take out what the business can physically pay you immediately. Now, if you've built up a cash reserve, maybe you can pay yourself out £1 million and the business can still operate. But then you're still owed £6-7 million, and that has to be paid off within probably 7 to 10 years. It needs to be paid off. So the biggest downside is you still got to probably be in that business working and grafting to keep the profits going to get yourself paid out. At the end of that period, then the business is no longer yours. You would be, passing it on to, I guess there would be an employee ownership a board of the Employee Ownership Trust. It has to be a majority of non-founders on there now. So that's the latest change. So like, if you're the owner CEO, you've sold, you need to have like 2 people who are non-vendors to be on the board.
So it's usually a lawyer or an accountant or
somebody
those,
who's independent who can help do it. So obviously the biggest challenge is still continuing to work hard and pay it off, and then once it's done, then it actually does pass to the employees of the business, which is quite cool. And there's a nice little...
It maintains culture as well. And I think that's one thing that we're seeing a lot of with owner managers when we're looking to sell. And obviously trade sales, private equity, great. You know, they all talked about back in the day, the bigger multiples, etc. That's not always necessarily the case now. And actually you lose a lot of the culture, and that's something that most people are quite proud of. And want to retain what makes you special. So actually with an EOT, it's still the same ownership. The way it's
I guess
run.
the culture remains the same, doesn't it? And you know, you're giving the opportunity to the next tier of management to
but you're
take
in
on
effect,
the business.
Owner managers are in effect taking their consideration out, and that, you know, that what they are owed over a certain period of time out of working capital. You can raise debt as well in the business in order to pay you out, and you know, it is a slightly riskier way because the business has to be able to pay you back out over a period of time, and you just hope that, you know, the business doesn't fall off a cliff and you're not able to pay.
I suppose that's the offset of then the not having to pay the
capital gains tax,
capital
which is
gains
quite
tax,
significant. But it's the biggest trend at the moment that we're seeing. We've had quite a few clients go through it.
Yes.
Interesting. Okay.
Yeah.
And you guys are running an event soon about that, aren't you?
Yeah, next month. We have Robin Hartley, who is the EOT specialist. And we have a panel of people that are owner managed that have gone through the same thing, hosted in London, and I'm sure we can give you details on how to sign up for it.
We'll make sure that everything's in the comments for that, in the description for that.
Okay, cool.
Let's go on to your next point on your list.
So we've talked about EOTs. That's kind of jumping straight into the exit.
Yeah.
What about things that actually reduce the value of your business? You can go the positive, which is what improves the value of your business, but they're kind of two sides of the same coin.
Can I just say, he'd make a brilliant podcast host. Like, you are a natural at this. For someone who was very reluctant to get in front of camera, you're very, very good at this.
Well, thank you.
That's how I get rid of him. This is great. Thanks. I mean, obviously there are lots of ways to devalue your business, and I think there are a lot of people that are a bit delusional as to what their business is worth as well. And we do a lot of M&A work at Azuki, all off market, and it's just because of people we know, and we kind of put good fits together. And we've done quite a few deals recently as well. I think one of the challenges is people's expectations and aligning them to what reality is. Everyone still thinks their business is worth, you can get a multiple of 8 times EBITDA and all of these things, and you think, that's been a long time now. We haven't had those kind of multiples in a long time. But there are definitely things that devalue business. Adil, do you want to?
You're going to actually turn this one back on me? Okay, fine. Right, I suppose the first
Ooh,
one is
sassiness over there. He's feeling it now. He's got that. He's in that host
he's giving me a compliment.
Do you know what I mean? He's feeling it now.
The first one, you are not your business, and if the business can't run without you, that is really, really devaluing your business. That much is for sure. So having a second tier of management or a business that is a bit more autonomous, I think, is really important. Another one for me is no recurring revenue. So a perm business, it can be very profitable, but actually if you haven't got recurring revenues through contract or some kind of maybe even more retained or RPO type stuff, that is going to have a massive detrimental impact on your business. And I think if we talk about typical temp contract split, we're looking at 60-40 in favour of contract is probably where you want to be, I would say.
Yeah, minimum, yeah.
So then what else have we got in terms of things that will devalue your business?
Too few customers?
Yes, that is a big one.
Concentration.
Having, 70% of our revenues come from 2 or 3 clients. On the one hand, they might be amazing clients, but there is a massive risk to anybody buying that business, and likely they're going to be looking for some kind of clawback if you lose that client in the first 12 months. So there's big downsides of trying to diversify.
And funding for those ones are tricky as well. Banks don't like it either. I mean, obviously you get lots of banks that do fund without concentration limits, particularly if they're big blue chip companies that with little risk. But ultimately it's a risk, isn't it? One client goes and most of your business is gone.
Things that not great, and this is a bit of an accountancy point. So lots of people like to know, what can I get away with putting through the business? And we've had it all from I'm going on holiday with the family to Dubai, can I put it through? It's like, well, not really, because there is a massive risk, and from our point of view, we're accountants, like we need to do things right. HMRC could come and look at your books, and if they do, we've got issues because you're going to struggle to
try explaining that one.
So I've got a client in Dubai, and it's like, okay, and the family, they needed to come with you. You need to stay in a 5-star resort. So that, I think, is an issue. But also, actually, that cost is coming off your P&L. So when you come to value your business based on EBITDA, well, guess what? EBITDA's already had that 10 grand holiday knocked off. And then you go, oh, well, I'll just tell them that needs to be added back. And so then you're going to them and go, hey, by the way, I haven't really done things properly for the past 10 years.
Got me. It's
and
stupid.
Then they're going to be, well, we want warranties and indemnities about if HMRC come and have a look at this. So you got it. I would rather keep things
and
clean.
Seller insurance is expensive as well, like indemnities for the buyer often.
What about stuff like if I've got the business structured in such a way that it's me and my business partner, but also my wife is the secretary and my business partner's wife is the secretary, and therefore they earn dividends, and do you know what I mean? Like, which a lot of businesses do. They set them up in such a way to extract as much revenue out of the business as they can tax efficiently. Surely that plays against you as well, right? Further down the line, because it's kind of, we get what you're doing here, but you're kind of.
I think it's okay if let's say your wife's a shareholder. I don't really have an issue with that. If it's been done, structured properly and legally, and paying them dividends, fine. I don't see a major issue. Where I think you've got to be careful, it's like, oh well, my son's at university, he's on the books, and my daughter's at university, she's on the books, and my sister-in-law's on the books, and she does a little bit of this and that, but it's almost like get everyone on the books, just earning like 10,000-12,000 a year, whatever the minimum wage is, to try and depress your profits and get stuff out tax efficiently. I think that's going to play against you, because again, it's messy. It is.
But it's also, you're telling your potential buyer, actually these are all add backs, because actually they're not genuine costs to my EBITDA, and they should all be added back. And they're like, well, it was all right for you, so why is it not all right? Like, actually, we don't want to add that back, because you're saying that those people are employees, so therefore it was a tax verge.
If
so
I'm purchasing this business, then do they come with me? Is that
exactly.
There's all of that. But is this then? All of these reasons you're describing there, is that not then the reason why only 0.2 businesses actually go and sell? Because they're not structured properly as a proper business. They are structured for maximum kind of extraction of wealth without minimum tax as possible. Do you know what I mean?
I think
let's be realistic about it.
Yeah, with people that think that they're going to go on to do a deal, but still actually treat the business as a bit of a lifestyle business and take loads of money out as well. I don't think you can do both.
No.
And you have to make that choice, whether it is a lifestyle business, and that's absolutely fine if it is, and you just want to take out what you can to have a good life, or is it that actually I do want to invest everything I have.
I'm growing this to sell it.
Exactly.
And you treat it in that different way, don't you? Yeah, you're not getting the company car for you and the wife and
But we often see it's conflicted, because they try to do both. They're like, I can take loads of profit out as well as growing out. It's like, actually, you haven't got the right hat on to make decisions.
You need to leave enough money in there to actually grow the business.
That's right.
Because if you how are you going to grow a recruitment business? I mean, it's going to be heads, new offices. And all of that you can use a bit of invoice finance or a bit of that, but you're going to need to leave some cash in there to do it. The question is, what about, I don't know, I've started my business, I'm running it as a lifestyle business, and I actually decided, no, I want to scale this now. Can you? And I think the answer is yes.
Yeah.
But you have to clean up your act. And you go, right, line in the sand. Yeah. From now on, like, I'm taking all of these people off the payroll.
I've got to put my big boy pants on now and
exactly.
run this properly, rather than the sort of the side gig that it's been almost.
I talk about dividend policies all the time. You often see me talk about it on LinkedIn, but I think actually having a formal policy in place on how much you're going to take out, dependent on how the business is doing. So whether that's 20% of profits or whatever it may be, for example, but it means that you're actually forced to think about how profitable the business is, rather than just going, oh great, I'm just going to take this out. I can go on a nice holiday this year, or I can do this, or I can do that. Actually, it's forcing you to think about only the business.
But this comes back down to financial literacy, doesn't it? Yeah. Because again, I was in business with somebody who would see 6 zeros on a bank, on a bank statement, and lose his shit. And be like, oh, we're killing it. I'm like, no. Like, that is, first of all, that's not our money, right? Yeah. That's not 50% of that's mine, 50% of that's yours. And secondly, you're not considering the fact that there's tax to be considered out of that, the VAT bill, the corporation tax, and wages and all the rest of it, right? So it's a different mindset, but financial literacy is so important with this sort of stuff, and I just don't think, unfortunately, enough business owners have it, which is maybe why so many back office businesses do so well. The incubator model works so well, because you can take a very sort of strong-minded recruiter who's very, very good at sales, and just go, look, you do that side and we'll look after everything else, and that person's not going to question how much money you're taking off them, what you're charging them, at what rate, and what you're doing with that money.
You touched on a very interesting point, and
bit of an emotive point. I know this question.
What are your thoughts on those types of solutions?
So I guess the solutions are ones that, in effect, do all your contractor stuff for you. They do your back office all for you, and they give you what they claim 100% margin every week back. So in effect, do everything for you. I'm not a fan. They have their purpose. I'd say up to about 8 contractors, they're great, but they're incredibly expensive. And actually, a lot of them keep the VAT back, and actually they're not giving you 100% margin at all. It's actually probably closer to 80%. You'd be better off getting your own invoice discounting facility. Yes, there is a certain level of you having to level up with understanding finances and stuff, but if you partner with somebody good who will be able to handhold you and that you feel comfortable speaking with on a regular basis, I actually think that's a much cheaper and more efficient way than some of those other models.
Yeah, and I think you've got those models that are kind of, they're doing back office, but it's pure funding, but they're charging you a flat percentage of every single invoice.
And it's of your turnover as well, irrespective of what your margin is.
And I think if you look at what it does to your actual gross profit margin, it absolutely decimates it. Yeah. So that's, and then I think, Nitin, you were talking about the kind of the people who are helping you start up, and they're going to take quite a high percentage of your revenue, till the end of time. And I think those ones, you're going to regret getting into bed with somebody like that, unfortunately, because once you're established, you're going to really feel.
Well, we had the exact same thing at Azuki when we first wanted to go into business. We had quite a few people that were interested in investing in us, and we thought, oh great, actually there is a benefit. I can definitely see that when you're starting out. I've never done this stuff before. I had to learn what SEO was. I didn't even know what that was 9 years ago, and you just learn along the way. But all these people are promising you a much quicker, take off time, and actually they probably would have done that and would have helped us grow much quicker in year one. But I always knew that after that, I think I would be doing the grunt of the work, and I'd be aggrieved that a portion of my profits would go to these people. And actually I thought, instead, let me just get a personal loan and do it ourselves. So I don't regret that decision.
But it's not, going alone though isn't right for everybody. Yeah. Right. I think the last sort of maybe 3 years has probably proven that, especially with the number of insolvencies that are record high, right? With the COVID loans, the bounce back, the RLS, this, that, and the other, so many of these businesses ended up in situations where actually, because they were given carte blanche to go, look, money's cheap, go and get it. This will help you, and then realising retrospectively that, oh crap, I've overplayed my hand here. Arguably, the ones that kind of did have that sort of back office looked after by a more established business, and yes, they were taking a bigger cut, they were able to guide them better, I think. Yeah. And sort of these guys managed to almost trade themselves out of trouble, right? Whereas, I mean, the number of business owners I speak to that are kind of like, I owe the VAT man this much money. I'm like, well, that money was never yours. Why have you spent it? Well, because I needed to. The bills needed paying. and you think, well, actually, if you had an incubator that was holding on to your VAT money, this situation wouldn't have happened.
True.
You know,
Yeah.
and some people need that. Some people do. Some people are their worst their own worst enemies, right?
Hand-holding. Yeah, of course.
But also, I think I'm going to sound really old. I'm old enough, but like the biggest issue, where are we teaching financial literacy in school? You know,
That's right.
You know, does anybody tell you that
APR
higher APR is worse? You know, apparently people thought that, you know, if you're getting 3,000% APR with, you know, one of these like loan companies is a good thing. It's like, well, clearly not. But if nobody's teaching that in school,
I always used to do that because I'm ex-retail banking, right, and used to have a real thing about like I only know as much as I do because I worked in retail banking, and so, you know, where is the education piece? But the truth of the matter is, certainly in my school, no one would have fucking listened. Like
No,
you could send somebody in and talk about interest rates and mortgages and credit cards. No one's fucking listening to that, right? In exactly the same way, there's plenty of information out there for business owners to go and figure this stuff out before they embark on that ownership journey, right? But they don't watch the content, they don't read the books, they don't look at it, right? Until it's kind of learn by doing seems to be the recruiter mentality, you know. That's how we
you learn more
built
from your
our
mistakes
desks.
than you do your
Exactly.
successes. You 100% do.
Absolutely.
That's fair.
What you got next on your list?
I think we should talk financial metrics.
Yes. I think the downturn has seen some funky metrics coming out of the woodworks, and we understand why they are. And I think with metrics, it's not about making hard rules necessarily, but understanding why those metrics have come about. Payout ratios is one in particular. So, for example, payout ratio is how much you pay your staff versus how much they generate for you in gross profit, and should typically normally be around 40%, but we're seeing some obviously much higher percentages, and often that means that they're not generating enough because there's a downturn and there's just not enough sales out there and able to get, or it could be that they're underperformers, it could be training issues, it could just be that they're new to the business and need a bit more time, and often if it's significantly lower than 40%, it means that it may trigger a new hire. But we're seeing interesting trends now when it comes to technology. And do you want to talk us through?
Yeah, I suppose just to clarify on that point, in that metric we're talking specifically about the cost of the sales team as a percentage of profit. You can look at it a different way. Look at your total staff cost for the whole business over your GP, and that would be a slightly higher number, probably closer to 50.
Okay.
In terms of what does tech mean? I think for me, tech, and particularly, we've actually avoided this word for the whole podcast. And you're going to hate me. I'm going to use those two letters, AI. What do I think it means? I think you'll expect more from your recruiters with the right tools and tech behind them. And so if you think about the amount of GP they're going to generate, it should be higher for the same money effectively. So you'd expect that payout ratio to actually come down. The cost of your talent is going to be a lower percentage of GP. And I think as the features of AI mature, I think it's going to halve. I think we'll be looking at like 20% of the cost of the team relative to the GP.
Once RecTalk's properly embedded into businesses, obviously I think we're just starting out with
we're very early in this journey, but absolutely.
So it's going to be an interesting one. I mean, obviously we've seen some changes in metrics already, things like desk cost. Typically I would consider that to be overhead costs divided by the number of sales heads, so like ignoring your staff, but really looking at, well, you know, what's the cost of my rent, what's the cost of IT, technology, all of this good stuff.
Where does like my admin team and my in-house marketing function and that kind of stuff, where does that come in? Would you sort of divvy that across the team as well?
We're going into recharges, and yes, depending on divisions. And so I would always do payout ratio as a whole or teams. I mean, I think looking at individuals, yes, you might need to do that, but over a period of time. So I wouldn't just do it in isolation months. I would always look at it over a period of time, because you will have seasonality in businesses. Even in a boom, you will have seasonality. If you're looking at recharges of those support services, it typically, I would keep it really high level. If you're KPIing people, it's one of my biggest bugbears, and that this is contribution. I would do it on contribution rather than on literally dividing up every single cost. I think you get into a lot of hot water, and I don't know what actual benefit it often creates. And then you get everyone arguing, well, I didn't use the printer this month, so why should I have that cost? And
how I would look at it. So you look at your sales payout ratio, so sales staff costs over GP. Then you look at it in total terms, so that all of your staff costs over your GP. So you're saying 40, 50, and then I would look at the rest of the overheads of the business divided by the number of sales heads. So kind of rent, overheads, teas, coffees, whatever.
Yeah.
And I think we've had quite a bit of inflation. It used to be about 5k for an office in London, 5k per sales head. You know, to have a bum on a seat in a decent office in London, and I think it's probably maybe gone up a little bit.
I mean, we're seeing a lot more efficiencies with hybrid, and rents are coming down because they have to, because they're all empty and they're getting lots of kind of rent-free periods and all of that stuff. But
it's kind of, I think it still kind of
pops
around
I mean,
that.
London will always be expensive. That's always going to be
and
the
obviously
case.
if you're home based, then that you're going to take a massive cost out of that. But I think by looking at those 3 different metrics, you cover the total
stuff,
all of your cost base. And
this doesn't sound like a really like kind of amateur question here, but like if I've got teams that are working from home as a business owner, do I not have to pay them some sort of uplift or something to cover the fact that they've got bills to pay? You know, the heating's on longer or whatever.
I mean, I would say no, because they're saving masses in travel cost.
Okay.
Like, imagine if you were.
So there's no legal or kind of formal requirement for me to do it. It's more of an ethical thing if I choose to, right? Yeah.
I mean, it's whether businesses prefer it or not, but people tend to prefer it. So I think they'd rather take that and not have any upside than having to commute.
And I think I've seen some people paying like a working from home allowance, but it's fairly minimal, because actually the government doesn't have a lot that they allow you to claim in that.
It's like £6 or something a day, isn't it? It's like nothing.
It's terrible. It's like
that's the HMRC allowance. It's rubbish.
It's absolutely nothing. It doesn't touch the sides when it comes to bills.
Fairs. Okay.
Anything else you want to add on the key financial metrics and cash flow?
Cash flow. All right. Here's one for you. How much cash do you think a temp business should have in cash availability?
Back in the day, it would have been 6 months. I would say nowadays 3 to 4.
Fine. And how does that change for a perm business?
Lower, much lower.
I think they need less cash.
I think you need less cash. Well, I think the whole point is that if they're not generating it for you, then drop ahead.
Yeah, okay. But I think one of the biggest challenges coming into a downturn is we'd come off quite a nice post-COVID boom, and you saw people coming into the new year. You know, they were increasing headcount. You know, they were contracting on, let's say, Bullhorn and LinkedIn, and they were signing up to these long contracts to get a discount on these things. But the biggest thing is you're locked in. You know, LinkedIn don't give a shit if you're.
We've seen many businesses because of LinkedIn licenses go under, right?
Not. I mean,
not the sole reason, but it's those.
No, big contributing factor. Yeah, the overhead cost of having a license like that,
and you can't resell them, right? You can't legally resell your LinkedIn license, and everyone's going to be in your tenant and be able to see all of the stuff that's going on, which is massive data privacy issues. So that has been a big one. But actually, one of the biggest issues, actually, sometimes accepting you want to run a lifestyle business and not scale can be the biggest tick. I'm profitable. I know what I'm doing. It's all in my control.
Yeah. Why should I change this?
Yeah. Why mix it up? Want to scale and try to scale and fail because I've signed up for a new the lease. I'm going to take a leasehold office. It's slightly different now with service spaces, but you can move up and down a bit easier. But back in the day, you're like, I want a new floor in this office. It's a shell. I want to spend £100,000 kitting it out. And then suddenly the bottom falls out of the market and you're left with this empty office. So actually sometimes the biggest challenge is people trying to scale and failing because all of those failed hires, all of the contracts, that's a big challenge.
My final takeaway is just remember invoice discounting facilities is the cheapest form of debt. So if you need cash in your business, ID facilities is the way forward. Every other debt is much more expensive, even bounce back loans, even term loans, all of that, or equity from other places, a lot more expensive in terms of other, not just financial, but lots of other reasons, invoice discounting. So make sure you're looking at your ID facility and getting the right rates.
No, I love that. There you go. Should we have a bit of fun? Should we finish off with a bit of fun? Because you guys have prepared a bit of a competition, haven't you?
I'm not sure.
I don't know about competition.
I'm not sure I've prepared, but hey, figure it out.
We'll wing it. Okay. So quick fire questions
Mhm.
off the top of your head. Will AI impact traditional recruitment metrics?
Yeah, I think we've already covered that.
Good. All right.
Definitely.
What is the ultimate tech stack?
Ultimate tech stack. So I think you need a CRM that talks to a pay and bill system that also talks to your accounting system. That is the bit that impacts back office at least.
Okay. Most complicated part of an EOT that people don't consider?
Do you know the one downside that we haven't talked about actually is if you sell 100% of your business today, you don't really get to partake in the upside. So imagine if your business takes off tomorrow or the next 5-7 years, you don't really get to benefit. Only caveat is if you sell not 100% of the business, which you can do.
51
And
minimum. Yeah, 51% is the minimum.
But yeah, you don't have to sell 100%. You could sell 80% if you wanted to. And the other one is, this is a little bit cheeky, but as soon as you've sold your business, you can take an equity stake back for nothing, which is, it has to be less than 5%, but you can actually take, so you participate, but to a much lower degree.
Yeah.
Okay. What advice would you give people budgeting in these hard times?
It shouldn't look like a hockey stick.
Yes.
Is probably
Our biggest
number
issue.
one, but no, it's being sensible. It's like, be pragmatic about what your sales are going to look like. Don't assume it's jammed tomorrow and the market's suddenly going to turn. Really understand your cost base
and make sure you are budgeting and re-budgeting if it goes off track. What's the funniest thing you've ever seen claimed as a business expense by someone? Not the Dubai trip.
Oh, I don't know. I think I'm going to pass this one back to you. You must have something funny.
Or 50 Shades of Grey.
Yeah. We have actually seen that come through.
Yep.
Amazing.
I think it was in error because it's not worth it 10 quid, is it?
So I didn't mean to do it on the business account. Prediction on who's going to win the league next year.
As in the Premier League?
Yeah.
Oh, I think it's hard to look past Liverpool, much as it pains me. Unless Pep can pull something out of the bag.
I thought you might say Nottingham Forest just as a left field answer.
I think if we manage to get into Europe, I think we will struggle to do well in the league next season.
Valid.
Fair enough.
That's it. Some more questions.
Okay. I don't think I've got
That's
enough
all right.
prep.
You can save me.
Yeah. No, that was good. Right. Any closing thoughts? How do people reach out to you guys? Adil, you can bring this one home, mate.
Reach out to us. LinkedIn probably is the best place, or get us at info@azukiaccounts.com. Happy to just have initial chat. Really important for us to get to know businesses. We won't be the right fit for everyone, but yeah, happy to have an initial conversation and see how we can help.
Amazing. I want to thank you guys for participating today. I'll flip the camera this way very quickly. Look at that. Get a behind the scenes look now. Look, this is the where the magic happens. But guys, thank you very much for watching, listening, subscribing, doing all the cool shit that you guys do. To keep us the number one podcasting channel in the recruitment industry. New episodes drop every Wednesday, every Friday. We'll see you again next time. That's enough from us. Enough from us. I always say that. Enough from us.